Hello, people. Quickly join in. Come on. Good morning. Good morning. Uh, Good morning, everyone. Come on. Let us start, people. My recording is on. Yes, people. Very good morning to everyone. Let's go ahead, people. Okay. So we have yesterday completed till what all the sums we discussed in class of receivable management, right? So today we'll be going first with what the homework section of this, right? And then after this is over, we are going to start with the next topic that is going to be accounting ratios. Okay, many of you might have seen when I was sharing the screen. What it's a new topic, accounting ratios. Yes, obviously. Nothing to be hidden from you people, right? Without letting you know, how do I teach the topic? Tell me. So we will be starting with that. Before that, we'll first complete the homework section part and let's discuss it out. Chalo, let us start. Good to see you on early morning. Okay, as usual, we'll quickly go through the homework section. Wow, I said quickly go through it, directly came to the last sum. Super. Okay, let's start. A company has prepared the following projections for a year. So the sales is going to be how much? 21,000 units. Selling price per unit is 40. Okay. Now, variable cost per unit is how much? 25. So we all know we sell one unit, we'll pay 25 rupees. We sell two units, we'll pay 50 rupees. We sell three units, we'll pay 75 rupees. But let's start 25 table, you know, na? Practice for all 21,000 units. Huh? Okay. Now, total cost is how much? 35 rupees per unit. So, friends, it needs once again to understand the bifurcation of what total cost into what fixed cost and variable cost. Okay. So, let's understand. See, total cost is 35, right? What does that mean? Fixed cost plus variable cost is 35. Out of this, what do we know? We know variable cost how much? 25. So it's a fixed cost plus 25 is equal to 35. Therefore, come on, all mathematicians. Fixed cost is equal to how much? Anyone adding? We have variety of answers, no? See, what is this? Very bad. Giving only one answer. Everybody is just saying 10. You have no other option. Add it, divide it, subtract it. What? Final answer 10. No variety today. Shit, that's bad. Everybody is saying only 10. No innovation. Fixed cost is 10 rupees per unit. But then I always say, we can match. Great. No innovation. I said, always say this is at what? At current level. Correct, friends? What is the current level? The current level is 21,000 units. Therefore, total fixed cost would be 21,000 units into 10. That is how much? 2 lakh 10,000. See this point I've been emphasizing every now and then, right? Fine. So the fixed cost in total fixed cost would be 2 lakh 10,000. Now you guys tell me, even if the production changes, even if the units produced and sold change, suppose he increases the credit period and because of that the sales increases, unless otherwise told in question, this total fixed cost of 2 lakh 10,000 will remain constant. Everybody agrees on this? Yes, people? Okay, fine. Okay, now let's read this out. So, existing, yes, fixed cost will not change unless specified in question. Okay, fixed cost can change, no, but fixed cost can change, no, after certain level of production. Means what, sir? You to always say fixed cost remains constant. But guys, see, take a simple understanding, common sense that you run your business in one shop. Okay, one shop rent is 15,000 rupees, let's say. So whether you sell one unit or you sell 10 units or you sell 50 units or you sell 100 units, fixed cost will be 15,000 only. But suppose my business expands so much that I'm not able to run my business through one shop. The space in that one shop is insufficient for me. Then I hire the adjacent shop also. Now instead of one shop, I have two shops. Now if instead of one shop, I have two shops, the fixed cost of 15,000 per shop will increase to 30,000, assuming same thing. Let's suppose even one shop is 15 and second shop is also 15. So my fixed cost can also change, but then that has to be given in the question. Otherwise, what you'll assume, earlier also he was doing business in one shop, now also he does business through that one shop only. So fixed cost remains same. Okay. So current credit period is 1 month. Company proposes to increase the credit period allowed to customers from 1 month to what? To 2 months. So as you can see, everything will change now. All the calculations will change. So this is a new credit period. It is envisaged that, means it is thought that, it is proposed that the change in the policy as above will increase the sales by how much? 8%. Okay, will increase the sales by how much? 8%. So because of that, guys, what will happen? Our current sale is how much? 21,000 units into selling price is 40. So the current sale is, I can say, 8 lakh 40,000. Current sale, 8 lakh 40,000 into 8% plus. How much is the new sale? Come on, tell me. Uh-huh, very good. 9 lakh 7,200. Yeah, correct, correct. Even I calculate. Yes, yes, yes. Right, you are smart boys and girls. Okay. So the new sale is going to be 9 lakh 7,200. Company desires a return of 25% on the investment. Okay, fine. So this is COCD. Okay, do one thing, guys. Tell me the variable cost. This is a new sales, no? Yeah. Tell me the variable cost. Calculate and tell me the variable cost. 5,67,000. Okay, 5,67,000. Guys, do some special course in variable cost and fixed cost. So I think now we are almost done with the whole question, right? 5,60,000, 67,000 would be our variable cost, but fixed cost would remain fixed. So variable cost would be 567, right? But the fixed cost will remain fixed how much? 210, right? I think I have given enough data so that you can solve this, right, people? Any doubt in this now? In this sum? No? Okay, great. So let's come to the next question number two. Yeah, question number two is slightly typical. We'll discuss at that. Rest all questions which are in the same lines, no, finish them off first. Okay, sure. Let us start. A firm has total sales of 12 lakh. Hey, people, anybody have confusion in that fixed cost, variable cost in the question number one? Some people have answered me wrong, actually speaking. I feel bad for them. People, how to calculate? Take 21,000 units. No, I'll show you that. I'll show that. Na. See, 21,000 is the units. Variable cost is 25. If you multiply this, you get 21,000 into 25 as what? 5,25,000. Okay. So this 5,25,000 is your original variable cost. Okay. Then what you do? Sales increase by 8%, so this will also increase by 8%. So I did into 8% and plus. So I got new one as 567. Simple. Back to this. Come to question number three. Okay, so what is told? A firm has a total sales of 12 lakh and the average collection period is 90 days. So this is existing, no? ACP, 90 days. The past experience indicate that bad debt losses are how much? 1.5% on sales. So this is our bad debts. The expenditure incurred by firm in administering its receivable collection efforts are 50,000. Oh guys, that's mean this is our administration costs, right? A factor is prepared to buy firm's receivable by charging how much? 2% commission. Okay, great. The factor will pay advance on the receivable to the firm at an interest of 16% per annum. So this is interest on advances. Okay, fine. Other wait, Ray, what type 1, type 2? First, see what is asked. After withholding 10% reserve. So this is factor reserve. Calculate what? Hello. Calculate effective cost. Okay. Huh. Correct. These smart boys. Okay, we had this in just same as last work question number 10. Got it? They are not asking you whether you should in-house or whether you should factor. Correct, people? Huh. So same. Okay, fine. Sure. Let's continue. I scroll a little. Yeah. Question number 4. A company currently has the annual turnover of 50 lakh. Okay, great. So this is existing sales. And the average collection period is how much? 30 days. Company wants to, so we can say what? These both things are existing. Huh? This is all the existing data. Okay. The company wants to experiment with a more liberal credit policy on the ground that increasing collection period will generate what? Additional. That's a, I think this statement we know. This is like usual things are to appear in the uh, in the in the in the question, right? This is a common. It has no impact on our solutions. Info. Okay, just info, just GK, just time pass. Okay, you all know that this is how it happens. From the following information, kindly indicate which policy the company should adopt. Okay, fine. Policy A is A, B, C, D. Average collection. Guys, understand the difference between this question and classwork question 1. You remember classwork question 1, this column was there. That was the addition to the average collection period. This is the average collection period directly given to you. Earlier it was how many days? 30 days. So this I can say this is a new average collection period given and the new additional sales given. Remember classwork question 1? It was like change was given and then we went on adding up everywhere. I'll show you. See, this was an increase in collection period and this was an increase in sales, right? Remember, see, these are the minute differences, but when we are in a rush, when we are in a tension in the exam, that how to complete, how to complete, how to complete. Sometimes these silly mistakes do happen, right? And then people come out and tell, ah, sir, I made a silly mistake. Guys, let me update you on this. That mistakes are always silly. Consequences are disastrous. I was driving, sir. The road took a left turn. I did not. I ended up landing in the valley. I was driving, so just forgot to put the brake. I crashed into the next. Silly mistakes, sir. Silly mistake. Mistakes are silly only. Consequences are disastrous. So we have to maintain our temperament and avoid such things. Okay, people, remember that. Anyway, so let's be back to this. So I think this will be very simple for you now. Hence, like after this is discussed, what we have to do? We have to prepare just like question number 1 only. Make existing column, then new policy A, B, C, D. Sales is given. Okay. See what is told about variable cost. 80% of sales. We write all the new sales, correct? Less variable cost, 80%. The balance would be what? Balance would be contribution. Okay. And then fixed cost is already given to you. 6 lakh per annum. So wonderful. If the fixed cost is already readily given to you, applied directly. Okay. Required returns is how much? 20%. Okay, fine. So that means this 20% is going to be your what? COCD. As you can see this is the pre-tax return, right? So friends, you to prepare like normal sum only. Means what will be your sequence? You start with sales. Less what? Variable cost. Then what? Contribution. Less what? Fixed cost. Okay. Other than that, do we have administration cost given anywhere in the question? No, sir. Do we have bad debts given? No, sir. Not given. No? That bad debt column is not. Collection cost? No, sir. Discount allowed? No, sir. Directly, what you subtract? COCD. And then what will be left? Net benefit. That's it. This is the only presentation to be done in the question. Got it? Okay. Okay. Now you will find this quite similar to classwork question 1. Okay. Same as classwork question 1. Okay. A trader whose current sale is in the region of 6 means 6 lakh. Okay. And an average collection period of how many days? 30 days. Wants to pursue a more liberal policy to improve sales. A study made by management consultant reveals the following: increase in collection period. So, guys, now what? This is your existing collection period. From that, everywhere you have to go on making an addition of this. Like people, like question number 1, you have to go on making addition everywhere. Okay, similarly, increase in sales. So this is a 6 lakh per annum. In that, everywhere you have to go on making a addition. Right? I hope you understand this. And the present default anticipated. What is that? Bad debts given in the question. Okay. Again, see this is there. Your favorite. Selling price is 3 rupees per unit. Average cost is 2.25. This is now going same on the question number 1's guideline. Right, guys? That means I would say average total cost is 2.25, and then I always say that this is what fixed cost plus variable cost. Now, out of this, how much is the variable cost? The variable cost is 2 rupees. Then fixed cost is 0.25 at the current level, right? What is the selling price given? Right? Selling price is given 3 rupees. So what we can say, variable cost is two-thirds of sales. Correct? Variable cost is what? Two-thirds of sales. Yes. So what will be 0.25? So okay, this helps you to apply in calculating variable cost. Okay. What will happen to fixed cost? Fixed cost is 0.25 by 3 of current level of current sales. Correct? What is the current sale given? The current sale is going to be how much? 6 lakh. Correct, friends? So how you will calculate 0.25 by 3 into 6 lakhs. So 6 lakhs into 0.25 by 3. How much it came to? Does it come to 50,000? Yes, that comes to 50,000, right, friends? So now you tell me, even though you go on increasing the sales like this, like 6 lakhs, 6 lakh 30, 648, 675, 690, everywhere, how much will put the fixed cost? Say 50,000, full land parking, right? Okay, fine. Current bad debt loss is also given 1% because in the table only the new policies is given. No? But okay. Again, a very similar question. Question number 6. Metallica toys manufacturers die cast metallic cars for kids. Okay, what happens? Shall we? Someshwar, where is Someshwar? Hi. Someshwar, how did you get the fixed cost as 1.1.5 lakh? Did you check the numbers? Oh, check. Okay, no worries. Okay. Yeah, let's talk about this, huh, guys? Metallica, toy manufacturers, die cast. Actually, you took 6. No. Uh, Metallica, toy manufacturers, die cast, metallic car for kids. You have any difficulty in understanding this? You know what happens to it? When see, uh, our profession is such, chartered accountancy, that I always tell my students, like we have studied in school, no, in biology, there used to be a statement that bacteria are omnipresent, so they are present everywhere. Something like that means a person who becomes chemical engineer would join a chemical producing business. Okay. A person who becomes architect would join a real estate business. A person who becomes mechanical engineer would join a mechanical engineering firm. A person who does hotel management would join hotel industry. A person who does CA can join anywhere. He can be auditor, he can be accountant, he can be finance manager for any of this. Okay. So we have to have good deal of general understanding also. Though the provisions tell that okay, fine, you can always rely on what experts' opinion while doing audit. Right? It is not expected that you need to know each and everything. Right? But it is good to know. Right? It is good to know. It will be a great uh, addition to your credentials if you know the business which you are auditing. So fine. So what Metallica Toys is doing, they manufacture die-cast metallic cars for kids. So some kind of metallic cars created from die. Fine. And if you don't understand, then it's okay. Read the next part. Its present sale is 60 lakh per annum with 20 days credit period. Okay. The company is contemplating an increase in the credit period with a view to increasing sales. That's a normal thing, right? So we always say, okay, fine, we all know this one. Present variable costs are what? 70% of sales. And the total fixed cost is also given to us. Company expects a pre-tax returns of 25%. So this is nothing but this is nothing but COCD. Again, you are given some other details like policy 1, 2, 3, 4, average collection period, expected annual sales. So guys, should I say this is directly the new values given to us, right? You are required to advise the company on policy to be assume 360 days. Calculation should be made up to 2 digits after decimal. Now listen to this, guys. Calculation should be made what up to 2 digits after decimal. So 25 points. This is all in lakhs now. So 65 points. Suppose you calculate, and suppose the variable cost comes to something. Okay, we calculate variable cost ratio given 70%. So see, for example, the annual sales is 65 lakh. Okay, in the new policy. So 65 lakh. Calculate the variable cost. So into 70% you will do. It came to 45.5. Need to try something else. No odd values are there as such. Suppose whatever comes, no, the answer comes, no, somewhere the answer comes 13.4325. So round it off to what? 13.43. That's what they are saying. I hope you understand. Rounding off to 2 digits after decimal, right? Yeah, seriously, calculation will come correct. Okay, let's come to the last question from the homework section. No, question number 2 is to be discussed. I know. ABC Limited is considering relaxing, right? Really cool. They are not considering relaxing, they are considering relaxing its credit policy, for which management has evaluated two policies. From the following information, kindly indicate which of the credit policy you would like the company to adopt. Annual credit sale, present value 87.5 lakh, proposed values 105 lakh and 118 lakh. Okay, fine. Uh, Accounts receivable turnover. Accounts receivable means debtors. So what is this given, friends? This is debtors turnover ratio. Okay. So debtors turnover ratio is given to you 7 times, 5.25 times, 4.2 times. Have we done something like that earlier? Correct, Karina. Very good. So, guys, you tell me, do we need do we need debtors turnover ratio or we need average collection period? So we need average collection period. Yes, correct. I think we have done this in Someshwar. I agree with you in estimation of working capital, but talk with reference to this topic now. Have we not done this? Have we not done this in question number 2, I suppose? Classwork question 2. Yeah, question 2 we have done, huh? Correct. See now, I'll show you what do we build. I don't have to travel miles, no? I just have to do like this. I'm going to show you guys. See this? Debtors turnover ratio. Remember what we do? I got a perfect reply. You know what happens? Uh, I got a very prompt reply from someone. Uh, the first one was from Naveen. Okay. Before that, Mohammed also told me. Many people have told me, right? Mohammed was Karina was the first to tell me 12 by DTR is ECP. Then Mohammed also posted the same thing. Naveen also told me. Sejal also told. Nikhil also told. So see, this is what you need to remember. Jai also. Many people have. Srijal also told me. Right? Santi has also told. Yes, correct. You all guys are right. Okay. Okay, now just to see whether the question is asking you to calculate in days. If they specifically tell you, do that. Otherwise, you are free to select months, days, whatever. Okay. Anywhere mentioned in the question, go for days or something? No. So you can comfortably take months, right? You know what? Why I do like this? Because if you go with days now, the calculations will little complicated. You'll have to round it off more. So go with months. Anyway, question specifying us to follow a particular thing that you do calculation days only or months only or weeks only? Nothing. So you have freedom to choose. So go with months. Okay. Yes, people. So I think this question is absolutely same as last one question. Okay. ABC Limited is required to give return over 30%. So what is this? COCT. And the variable cost ratio is how much? 70%. Okay. So suppose you can manage that. Fine, people. So we left with only one question to be discussed from the homework section, and we will do that. Okay. Let's talk about the small question. Okay. Yeah, it needs a discussion. Shall we? Okay. I hope everybody is done writing everything. So listen to this. See what is asked. A firm is considering offering 30 days credit to its customer. Okay, what they are planning? They are planning a 30 days credit to its customer. Okay. The firm likes to charge them annualized rate of 24%. The firm wants to structure the credit in terms of cash discount for what? Immediate payment. Okay, fine. How much would the discount rate have to be? First, we did not understand the question. Okay, that is the first reaction most of the time students give me after reading all this. Okay, let's. Okay, you remember that 2 by 10 net 30, 1 by 10 net 45, right? Okay. So what happens to be the idea over there? The idea is that okay, your normal credit period is 30 days. Okay, your normal credit period is 30 days, but if you pay within certain days, so we'll offer you certain discount. Okay, fine. So now see what the company does. The firm is considering offering 30 days credit to its customer. Generally, they offer 30 days credit, and firm likes to charge them at an annualized rate of 24%. Okay, means what, friends? See, when I'm offering you 30 days credit, now my my pricing policy is such. Okay, my pricing policy is such that I include 24% interest into it. You understood? You understood what I said? Okay, that I'm going to charge you 24% per annum if I'm going to sell you on credit. Okay, then what? See, if you are willing to pay me immediately, then I should offer you some discount. Understood what I said? Understood what I said? Okay, so that the today's value, acha, first of all, you understand time value of money, right? So whatever I sell today, you plan to pay me after 30 days. So I add 24% interest annualized in it, right? Okay. Now what I will have to do, I will have to offer you such a discount so that what you what so that it becomes equivalent. Okay, that's what the question is all about. So uh, let's put it in some numbers. Okay, fine. Credit period offered is 30 days, right? And what else is told? Rate of interest is how much? 24% per annum. Okay. Yeah. Uh, will take how many days a year? 365 days a year. Since what? Nothing specific. Obviously, right? Everyone is clear to what I said? Okay. Now, suppose today sales value is 100. So after 30 days, after 30 days, how much it will become? Okay. So what will you do? This is a simple, sir. 100 into 24% for 30 days, correct? Right, no? 100 into 24% is obviously 24 into 30 divided by 365 comes to some odd value. Okay, that comes to 1.9726027, blah blah blah. Okay, fine. So this what you will add in 100 and you will get it over here after 30 days it will become 101.97 blah 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 blah. Correct, friends? Right? So now this is the today's 100 becomes 101.97 after what? After 30 days, right? So that means this is a interest component you are charging to them, right? So what you will have to do? You will have to give them sufficient discount, right? That it becomes equivalent. Okay. So how we will calculate? One minute. Yes, we are. Yeah. So, see, audible, visible. Okay. So this is what is payable after 30 days. How much? 101.97 something something. So what we can say that today 100 rupees. Okay. After 30 days has become how much? Has become this 101 point. What is it about? 101.97 26 blah 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 blah. Okay. So today that means it's what? Today is a present value and this is a future value. Okay, fine. No, Someshwar, see that is a trick number. See, if this was given 360 days, or if it was called 1 month, things would have been quite simple. Okay, I know, I understand. But question is like that, so we have to tackle it like that. They are telling in the terms of what? 30 days. Okay, even they are not telling that take 360 days a year. Had they told 360 days a year, it would have been very simple. Okay, yeah. So we can't do like that. I know, otherwise it will be very simple. So see, today's 100 rupees becomes 101.97 after how many days? 30 days. Now, how we have to go reverse? We have to find that what if he pays today only? So let's put it the other way around. That what if, sir, after 100, after 30 days, if this is 100, then what it will be today? Okay. So you have to go reverse and calculate that value. So it will be present value would be 100 into 100 upon, I will prefer to take that full number 101.9726027339. Okay, so 10,000 divided by 101.9726. Wait. 260,739. It came to some 98.06 triple five 61 something. Okay, so see, I will say, okay, fine, let's make it 98.07. Okay, now see, understand this. How we have to interpret. I understand sometimes you'll find it difficult to, but you see, it's very simple actually. 100 rupees, see, now see like this. We have to calculate in terms of percentage, no? So we are doing it. Today's 100, you ask him to pay 101.97 blah 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 after 30 days. So what if he is going to immediately pay? Okay, so if he is going to after 30 days he was to pay you 100, how much he should pay you immediately? He should pay you immediately 98.07. So now that means how much is the interest part out of it? See, now compare these two values. Compare these two values. Okay, and therefore you tell me therefore. So we compare these values. So interest part is how much? Now, if I use that same now 98.06 blah 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 minus 100, so interest part comes to 1.9344 and so on. That means, see, what am I going to tell him? What am I going to tell my Wait. Don't jump to conclusions. What am I going to tell my debtor? Okay, that sir, after 30 days, you have to pay me 100 rupees. If you pay me immediately today, if you pay me immediately today, I will offer a discount of 1.93%. Did you understand? That see, that's why I took this future value as 100 now. So it's making you directly in the terms of what percentages, right? See that okay, what is our system? We want to charge 24% per annum, correct? So according to our calculation, 100 should become 101.9726, blah blah blah. Okay. So let's go with the same system. 100 will be how? If 100 is what is to be paid in future, what will be the today's value? So if I sell him goods today for 98.07, no, I will tell him, sir, after 30 days, you have to pay me 100 rupees. But if you pay me today itself, na, pay me only 98.07. So what I will tell my customer, I'll tell my customer, discount offered would be 1.9344, approximately how much? 1.93%. Did you understand this, guys? A little number wise, sometimes what happens, a lot of decimal comes in, common sense which trips out generally. That's what happens. Did you understand what happened over here? Okay, great. Thank you, dear Sushma. Sir, SS screenshot. Sorry, you can write it, na? What's wrong? Screenshot you want to take for this? Okay, take it. I don't mind. Are you done, people? Okay. So we are done with this topic. Everyone listener out there, everyone out there. Boy, all of you. Sir, letter shows the notes in the sums you wrote. Uh, what do you want, beta? You want me to show the question? Immediately reply. Because now, see, K Gayu, you want me to show question? I'll do that. See, listen, what is the plan for the day? The plan for the day today is definitely the next topic, that is accounting ratio. Okay, so what we are going to do, we are going to log out of this meeting. Or fine, I'll stop the recording. I'll start the new recording after that, so that whenever you see watch recorded lectures, you will have topic. So I'm going to stop this recording. So before that, you ask me what you want related to this topic. So you want to show me the question. Okay, one last time. Questions. I'll put it double page. Be fast. Hmm. It starts here. I scroll. I'll show everything now. Takes 2 minutes. Chaitra, I'll show the homework section also, no, obviously. People, I scroll further. I'll go up. This is the last page. Ah, that's it. Done. Done, people. Okay. Fine. Homework section. First page. Homework section. First page. This only, na? Are I put dual pages, na? See this one. Question number 1. Na? It is here. Homework section. First page. Question 1, 2, 3, 4, 5 can be seen over here. Pack up, guys. Pack up. Oh, pack up means pack up with this topic. Okay. So stop recording. You will receive an email notification when it is ready.